Assumable mortgages are becoming very popular and I'm being asked about them a lot, but I wanted to lay out a couple of things for you guys, and specifically two things for you to know on the first steps of helping a customer with assuming a mortgage. But assumable mortgages, if you don't really know about them, they're becoming very popular because interest rates are higher than they've been in the last 12 years. So most of our mortgages out there have rates lower than where we're at right now. And if their mortgage is assumable, then if they're trying to sell their house, they could advertise for a buyer to be able to assume their loan, which means that they get to take on the rate that they have at the moment. So if it's 3%, they get that rate. Or if it's 5% or whatever, they get their rate. The second thing is they also get their balance. So that's very big to know, because if someone is trying to sell their house for $400,000 and they want to do the assumption because they want their 3% interest rate, but the balance of that mortgage is $300,000, there's $100,000 that has to be made up. The mortgage companies do not increase the mortgage to cover whatever difference. And they don't do that because they don't want anybody to assume the mortgage. It's a feature that they tack onto mortgages, but they really don't want people to have it because they want to collect the higher interest rate, right? So, know those two things. If there's a big difference if there's any difference at all on what it's going to be sold for versus what the balance is, they've got to come up with that difference. So that's big to know. Now, I'm not able to help figure out if somebody's mortgage is assumable, and we would like to say like, oh, all FHA loans are assumable. But something else to know is that if the customer has done anything with their mortgage, like let's say they had an assumable loan and they've done something with their mortgage to either go into forbearance. COVID was a big time for that, where a lot of mortgages went into forbearance. Or if they did a modification on their mortgage, they don't realize it probably, but they signed paperwork giving up the right to allow somebody to assume their mortgage. So don't assume, oh, that you've got an FHA, okay, it's assumable, we'll put that in the MLS description. Don't do that. What needs to happen is they need to call their 800 number. So this is step one. When you're going to list a property, ask the customer to go ahead and call the mortgage company to verify if their loan is assumable. Don't take their word for it. Don't automatically assume because it's FHA that it's assumable. Go ahead and have them call the 800 number and just ask, is my mortgage assumable? That way you know if you can advertise it or not. Number two tip is if you've got a buyer who's interested in assuming the mortgage and they can make up that difference between the balance and what they're trying to sell it for, what the seller needs to do next is request an assumption packet. Now, it used to be called an assumption packet. Just they could use those words, but it may be something digitally now, and not like an actual packet they receive in the mail, but something that allows the new buyer to apply to be able to assume that mortgage. So that's the second step that has to happen. I get asked often, oh, I have a customer that wants to assume a mortgage, can you handle it? And I cannot. It has to actually go through the mortgage company that the seller is the seller's mortgage company. So they have to call that 800 number on their mortgage stub and get that information. I hope that helps. It is super popular. And if you've got a customer who can get the seller's 3% interest rate, it's great as long as they can come up with that difference between the current mortgage balance and what the person's trying to sell the house for. I hope that helps. I'll talk to you later. Bye.